Hi, Barbara Friedberg here from Barbara Friedberg Personal Finance and Robo-Advisor Pros. I'm a former portfolio manager and university investments instructor, and today we're going to be drilling down into two top-notch robo-advisors, Wealthfront and Fidelity Go. Each will manage your money for low fees, but there are a lot of differences between each of these robo-investor platforms. So you'll learn the details, the pros, the cons, who each platform is best for, and which one would be right for you. So let's get started. Wealthfront is one of the oldest robo-advisors available. It was started back, around 2008, and it is an all-digital investment advisor, which means everything is done online. Whereas Fidelity Go, well, look, everyone's heard of Fidelity. They're one of the biggest investment brokers around, and they offer pretty much everything for investors. But they've recently launched a robo-advisor, which is their automated investment manager to compete with Wealthfront and Betterment and all of the other robo-advisors. They offer access to all of the Fidelity services in addition to just the Fidelity Go robo-advisor. So let's dig into the features. How much does it cost to get started? Wealthfront requires that you start with $500. So if you don't have that minimum investment amount, then Wealthfront isn't going to be the platform for you. Whereas Fidelity Go, you can get started with just $10. So tiny investors might prefer Fidelity Go over Wealthfront. And next, how much do they cost? Because you're getting a platform to manage your investments, to choose your investments, to rebalance them when they get out of line with your preferred mix. So you've got to pay for that. Now, Wealthfront charges a flat fee of 0.25% of the money that you have invested in the account. So if you have $1,000, you're going to pay $2.50 to have that money managed. But if you sign up with the link below, and of course you don't have to, you will get your first $5,000 managed for free. Now, Fidelity Go has a little bit of a different fee structure. Your first $10,000 are managed for free. And then from $10,000 to $49,999, you'll pay just $3 a month. Once you hit that $50,000 limit, you will pay 0.35% of assets under management. So for $1,000, you'll pay $3.50. Small amounts, the fees really aren't a big deal. As your portfolio grows, 0.35 versus 0.25 is a little bit of a difference if you're a fee-conscious investor. So just be aware of how the fees work. But now let's get into what are you actually investing in? Well, each of the platforms start out with a questionnaire and ask you a little bit about your investing background, your goals, how much risk you think you can tolerate. In other words, are you going to totally freak out if the market drops a little and your investment values fall? And given the information from your interview, they will come up with an investment platform or portfolio or group of investments that are best suited to you. Both Wealthfront and Fidelity Go have professionally managed investment portfolios. I'd be comfortable with either of those. Although Wealthfront only offers exchange-traded funds, which is a type of investment fund. They have a couple of other drill downs within their investments. They offer a risk parity strategy, which is an approach to try and minimize your losses. They also offer some smart beta portfolios. Again, that's another approach to try and beat the market returns. You can read more about those in the article that I'll put a link to in the bottom of this video review. Wealthfront also offers 529 accounts, which are college planning accounts. And that's great if you have kids or you yourself are planning to go to college and you want to save up for that. Now, Fidelity Go is, I almost forgot. Wealthfront has just introduced a new feature, which is very unique among robo-advisors. And that is the opportunity to go beyond the investment portfolio that they've recommended for you. And it includes adding from 36 different types of funds that you can choose on your own. Or if you'd like to craft your own investment portfolio and have Wealthfront manage it for you, well, you can do that as well. So that's a really nice feature. I also want to have a shout out to Wealthfront for their Path Digital Financial Advisor. Now, what the heck is that? That is their attempt to match the services, the questionnaire of a real live human financial advisor. And they ask a lot of really important questions, and you can go as deep as you want with that digital financial advisor. I like it. I think it's great. It's intuitive. It's especially nice for someone who wants to get into a little bit more of financial planning, but really doesn't feel like they need to talk to a human. So let's switch over to Fidelity Go. They offer ETFs and also mutual funds. Unlike Wealthfront, their funds are not only passively managed, but they have some that have a manager at the helm as another way to try and beat the returns of the market. Fidelity offers an annual portfolio review, and of course, they're part of the Fidelity family, which means you can go to a Fidelity branch. You can call a Fidelity representative 24/7, and you've got access to any sort of financial service that you might want. Investment accounts, this matters if you're looking for a specific type of account. But in general, they both have a pretty nice selection. Both have individual and joint brokerage accounts, quite a nice variety of retirement accounts. But as I mentioned, Wealthfront does offer that 529 college savings plan, which is really nice for a robo-advisor, and one of the few that does offer that feature. So let's get on down. Who is the best candidate for Fidelity, and who is the best candidate for Wealthfront? But before we get to that, let's take a look at their investment homepages. This is the Fidelity Go homepage, and it's very clean. You can watch a video to see how it works. You can see what the app looks. And here's a sample portfolio with a specific, what we call as an asset allocation at Fidelity. And this is a moderate portfolio you can see here. So you have 35% invested in U.S. domestic stocks, 15% in foreign stocks, 40% in bonds, 10% in short-term cash and bond type investments. They build and manage the strategies after you answer just a few simple questions. We've talked about the pricing, the minimums, and the really nice thing is if you want to talk to someone, you can call them 24/7. And of course, you can look at your portfolio online whenever you want. And that's true with both of them. And it starts out with your little questionnaire here and just goes on with about 5 to 7 questions before you build your portfolio. So let's look at the Wealthfront platform next. You can see, although Wealthfront is not your Fidelity, it does offer a lot of financial and money management services for you. They have their investing, they have borrowing, planning, and a lot of educational tools as well. You can see, again, risk tolerance, what the investment portfolio would look like. If you're a little more aggressive, you get this type of investment mix with a little heavier in stocks and a little lighter in bond investments. I do like that Wealthfront has Bernard Malkiel, who is the author of Random Walk Down Wall Street, on their advisory board. He is one of my favorites, and he's just brilliant. So that's a notch in Wealthfront's corner. You can also choose from your own favorite particular sectors like healthcare, technology, clean energy, and more to customize your portfolio. So now back to who is Fidelity Go and who is Wealthfront right for? Because as you can see, they're both really good platforms and they've got a lot of really nice features. Fidelity Go is excellent if you just want to be in a big company like the Fidelity family. If you want branches, if you want other services, if you maybe already have an active portfolio at Fidelity, then it makes sense that you might want to just stick with that company. Also, if you would like actively managed funds within your portfolio, you might consider Fidelity Go. Additionally, they do have, I believe it's 4 fee-free mutual funds in their portfolio. So that's going to cut down on your costs just a little bit. Whereas Wealthfront is best for investors who are absolutely fine with an all-digital platform. Although they don't publicize this much, but their customer service representatives are all licensed individuals, which means they have a basic understanding of stock market investing. Wealthfront offers quite a nice range of investment strategies, like we mentioned before, like smart beta investing and their risk parity fund, and the opportunity to customize your investments. The 0.25% asset under management fee is lower than Fidelity Go's for larger accounts. So you might want to consider that. In the last analysis, you cannot go wrong with either Fidelity Go or Wealthfront. I will offer at the bottom of this links to both Wealthfront and Fidelity Go, links to the article that I am referencing, as well as a review article of Fidelity Go and a specific review article of Wealthfront. So if you do sign up for the Wealthfront to get the $5,000 free management fee, just be aware that I might get an affiliate commission, which is a small fee that goes to help me pay for this channel. Thanks so much for listening. If you like this video, please give me a thumbs up and subscribe to my channel. See you next time. Bye.